If we now move over to the vol side of things in crypto, realized volatility has fallen off a cliff. Okay, so we've got on a 7-day basis, realized on a 30 handle, nearly, on a 30 handle now on Bitcoin, and Ethereum's not much better, basically, right? So these things really stuck in a range, realized falling off a cliff, and that implied realized differential just keeps growing. So you can see these kind of crocodile, alligator jaws here, and the red bars are basically that difference, right? Telling you what that distance is. So positive carry in the order of magnitude of 30 to 40 vols here, which is unbelievable, right? It's really, really large. And that's because implieds are refusing to collapse because we've got CPI data out this week and we've got all this macro risk and you've got all kinds of crazy swings happening in FX and bonds, whereas realized is just falling off a cliff in crypto and it's stuck in a range, right? So that's what's happened here. Now, we may get some knee-jerk movement on CPI this week, which kind of closes that gap a little bit. But in general, I'm struggling to see how implieds don't have another leg lower into the Friday DOV auctions because, even if we get a bounce and realize it's so much below implieds that I think we are going to see implieds catch down to that, okay? If we look at the individual dashboards, like we've already said, spot down smalls on the week. Vols relatively unchanged on Bitcoin on the week, but they are in that kind of lower range now. Where picking up vol seems to be a decent idea. Put skew flat as risks remain high. It did collapse a bit into the end of last week, but it has bounced. Curves are kind of contango, flat to contango. That front end weekly gamma is relatively big because of the CPI. But we've got this huge positive carry here of 30 vols, 98 percentile type number. That's absolutely huge, as we already flagged. What did I do? I dumped my 22K calls in Bitcoin because Bitcoin failed to participate in that squeeze that we saw after month end. And as risk assets rolled over after the NFP number last week, I didn't see the point in holding on to those calls. So I got rid of them and recouped about 60% of my premium. Okay, that's kind of what I'm thinking in Bitcoin. If we then have a look at the Ethereum dashboard, similar stuff, spot trading in line, vols a bit hammered down, about 6 points on the week in the 1 month. Put skew trading higher than Bitcoin, still at 12 vols. For the 25 delta skew in the 1 month. The curve is flatter. That front end still holding a little bit of a bid at 80, near 80, but the 1 month at 75, and then the curve's pretty flat after that. And the huge positive carry of 40 vols this time, 98 percentile sort of number there. What have I been doing strategy-wise on Ethereum? Now that implieds are screening cheap again, we see them below the x-axis on this strategy compass. I've covered all of my short Vega on Ethereum, every last bit of it. And now I'm considering starting to accumulate longs. I haven't really done that yet. I'm long a little bit of Bitcoin Vega. I'm thinking about starting to get some Ethereum Vega on the book. How am I going to do that, given that realized is so poor and the carries 40 vols? If I just bought vol at 80 and it was carrying at 40, I would have a theta bleed there, and it would probably be drifting lower and losing me money in Vega as well. So the way I'm going to manage that, as and when I do buy March 23, June 23 Vega, I'm going to be selling shorter dated, probably upside, to kind of keep that theta neutral, right? So try and carry that Vega with no time decay on it and kind of waiting for that Vega to then catch a bid when the market starts moving again. Basically, that's the idea. And I'll move away from my local short gamma that I'll be running against it. That's the idea. All right. If we now have a look at the kind of relative value in a bit more detail, as we said, we've been running that spread. Well, we've been running short Vega on ETH because that spread was so high. You can see last month it was up here at that 40 to 35 kind of level, collapsed all the way down to be sub 15. That was my target. I said it last week. This thing gets sub 15, I'm covering all my vol. It's exactly what happened. So I covered all my vol, right? I'm not going to mess around and be greedy anymore. We can see skews, relatively skews here. The yellow line being above the green line shows you Ethereum skew is steeper for puts relative to Bitcoin, both on a 1 month and a 3 month basis. So market's definitely feeling that the crash risk in Ethereum is greater given the elevated level of spot, because it does still have outperformance relative to Bitcoin on a longer term horizon because of that merge rally that happened basically. So, if we do break these levels that we're hovering above right now, that sharp move to 1,000 is kind of what people are trying to hedge against, and why that skew is relatively elevated. If we take a look at crypto option flows on the week, what did we see? This is our block sniffer from GVol. Mixed flows in Bitcoin. We saw puts and local strikes generally being sold to earn theta, to get those theta bills down because it's just not realizing. So you see straddles being sold in October. You see Oknov and DEC put sellers. But then on the directional side, it's still a bit of a bullish bias, trying to pick up some bargains here. People buying using October calls, 21 to 24K area calls being bought, and some December call flies being bought as well, as a way to get some leveraged exposure to an upside move into year end. If we look at Ethereum, call flows being the dominant driver, 70 to 30 in terms of ratio. The collapse in realized has led to people dumping short dated options, similar to the flows that we've seen in Bitcoin. So we've got put sellers, call sellers in October. We've got mixed call spread flows in October and November, some buyers of October call spreads, some sellers of November call spreads. So it's a bit mixed, nothing sort of clear there. But then in that longer part of the curve that I want to start picking up, June 23, we did see some buying on the call side in the 2,400 to the 3,000 strike zone. So we see that there highlighted on the block sniffer. Okay, so those are the main flows that I witnessed last week.